Okay, how do the markets fare?
Go ahead, please. Yeah, the market trended down today. I mean, this has been the case. Its market has been trending down for a while. Basically, right now, the only reason that we can offer or give is that there are more attractive sources of returns of investment. So basically, the money market overnight and interest rates are quite high, as you know, and the fixed income securities also, the yields are still attractive. I mean, if you look at the drop in yields of securities across all maturities, treasury bills to bonds in the last 3 months, I mean, stating June 15 figures, for instance, yields have dropped for between over 100 to 150 basis points, showing that people are trading and investing more in the fixed income end of things right now, basically.
All right, we do know that some treasury bills have been auctioned. Just give us a sense of the uptake and also the yields, because we're told, you know, in a market that's been very confused, this is the one segment that's performed really well.
Come again, please.
Tell us what's happened with the bond auctions.
Okay, there was a bond auction on Wednesday. The most attractive of the instruments that were issued was the 3 years to maturity right now, because there's a calendar out, and there's this calendar shows that the government is going to reduce or stop borrowing at that short end of the market. We're going to continue having 7 to 10 years maturities being issued from October to December, and that's according to the 4th quarter calendar as issued by the federal government.
Okay.
We also...
Finish your sentence.
Okay. Basically, the yields on 7 and 5 years instruments that were issued actually trended up because of illiquidity in the money market. As we speak, the system is in the repo. We expect funds to come in anytime from next week, Monday to be precise. So right now, we're seeing a lot of traders sell down some of their positions to take profit, basically.
The figures that we saw for inflation, Bankole, have they had any bearing on the fixed income markets?
Not really, not really. Yields continue to trend down. Yields had continued to go down before inflation figures came out. Really, what most counterparties that I've spoken to are anticipating is the MPR, that's the monetary policy rate that we expect to be released on Tuesday. Basically, that also leads the way on trends, leads the way things will go in the fixed income and then money markets, basically. So we've seen a lot of inactivity since Wednesday. People bought and then did not sell down really. Yields have not really changed from what they stopped out on Wednesday. So we're expecting that MPR would come out, and then there are speculations of where it might move to also. What's
your view on what will happen on Monday? Because we've seen inflation figures looking a lot better than what they've been, but we also know that the central bank is not just concerned with inflation, they're also concerned with stabilizing the Naira. What do you think their priority is going to be?
Okay, the major priority right now is to to have a sustained curb on inflation. Basically, the figure has dropped, but we all know that the last quarter of the year is here, and then we have a lot of festivities. We're going to see a lot of spending, imports of most things that we'll be consuming in this year. And then the government itself is spending a lot. Last year, of course, the major reason for spending so much was that it was elections coming in the beginning of the second quarter this year. But despite, having done the elections and all that, we're still seeing government expenditure on the rise, and then the new minister of Finance has also spoken about that and on the amount the government is borrowing. Basically, they still need to control the amount of expenditure, especially the recurrent expenditure, which is still very high. Of course, most of our consumables are imported, and then this adds pressure to Naira. And then as this goes on, you expect CBN to probably hike rate in anticipation, because we've seen that they've been very proactive as rate has been increased over 250 basis points since January. We expect a hike increase in rates on Tuesday. Most counterparties and others, investors that I've spoken to, analysts in the market, think that it will be between 25 to 50 basis point increase.